Tipp FM's Tipp Today.
With Slattery's Garage, Puck On. Over half a century driving the people of Tipperary and surrounding areas with quality, reliable and economical vehicles, new and used. Call the sales team today to discuss your next car or van on 067 24111.
Thanks, Pat. Welcome back to the second hour of Tipp Today. We are live from Nina today. Okay, lots coming into us from my conversations with the Taoiseach and indeed with Alan Kelly. Let me bring you some of those. When you ask Mr. Harris, well, it's a bit too late to do that, but ask the Taoiseach, why is Nina now and Nina over the last 15 years getting all of the investment and all the other towns around the county haven't had anything close to it? This is one of our listeners to us today. Let me bring you some more of that. Yeah, one of the messages I read out for the Taoiseach that came in from one of our listeners, just a response to that, and it is the cheek of him. As usual, goes on the attack and twists words. My partner is a pensioner and still has to work. Because of that, we don't qualify. And we're still paying a mortgage and will be for the next few years. We don't ever benefit from any package. And there's thousands of us that are propping up this country and getting nothing. I've never criticized any sector. I stated, is it? It's the same people all the time that get help, and the likes of us don't. And that would refer to the conversation we had with the Taoiseach around the squeezed middle and the like. Anyway, still lots more coming in on that. But right now, let's link up with our studio in Clonmel and our financial expert, Francis O'Hanlon from FOH Finance. Good morning to you, Francis.
Hi, Fran.
And good to talk to you today, even though I don't see you in person, you see. We've got lots of questions. Will we deal with those first of all, Francis, if that's okay? I'm buying the house we're living in. We have a personal loan. Family have given us some cash towards the cost. How do we manage the cash part, is the question.
Yeah, so I'm not really sure what this person is asking, but they're entitled to receive cash. I suppose that's the first thing to say. Yeah. Their family are entitled to give cash. Another thing to add there. But you need to make sure, obviously, that it's within revenue guidelines, be it for small gift exemption or inheritance stroke gift thresholds for the lifetime of such gifts. So you will, I suppose the most obvious thing is you will need to probably lodge that money and pay these funds by EFT or bank draft to your solicitor for the completion of the purchase. And possibly you may have to make a revenue declaration in respect of the funds that you're receiving, again, depending on the thresholds. Look, I suppose if in doubt, speak to a tax advisor, but again, just make sure that it's compliant and that you don't run yourself into trouble down the road by not I suppose declaring funds that maybe you should have declared, or noting them somewhere, as they say. But again, if in doubt, speak to your solicitor. Probably give you a good idea as well, either to your solicitor or to a tax advisor.
I love how familiar this question is. It goes, hey, Francis, I called into my local credit union in Nina last December and I asked what dividend or interest rates they're offering. I was advised that no dividends or interest will be paid. At the moment, they are proposing to sell mortgages and give loans to farmers. How fair is this? John from Nina, who's kind of cross.
Okay, so look, I can't speak specifically about Nina Credit Union, but let's just speak in general terms. Interest, dividends, be they credit unions, banks, they all differ. And I suppose the big thing is savings slowly dwindle in value. We've mentioned this so many times, Fran, over the years. You have to earn money on your money. And the big thing that's shouting at me here about John is that John is in tune. John is aware, and that he asked what interest he was getting or what dividend was payable. And that's really, really important that you are aware. From there, you can make a decision, be it to your benefit or your detriment. But if you make a decision, say, oh no, I don't want any risk, I prefer to stay in the credit union or the bank, knowing that I'm getting so little interest that it's not even keeping up with inflation, or I'm not getting any interest at all, that's a decision, but it's an informed decision. okay? But I would say it's possibly time to think about using some of that money, John, to maybe try and get some better rate. And I think, again, it's hard at the moment with the markets are a little bit volatile, so that makes people a bit nervous. But again, market fluctuations come and go, and we'll talk about that no doubt 100 times in the next couple of months again. But I would say for any of the credit unions or banks, and there's inclinations of this already, that they're already a little bit nervous about this upcoming government savings scheme. That they're talking about at length now, and it seems to be at a fairly progressed stage where they're looking to implement it sooner rather than later, where it may be that if you save under the system that they're proposing, that you will be tax exempt, or else it'll be a uniform very low rate tax. So I think all the banks and credit unions will have to sit up and take notice when that comes into play, or they might find that they have very little, not little left, but a lot of their reserves could be gone into other incentives.
Yeah, I was speaking to Simon Harris about that new investment scheme, and there's some fears about that it's just going to be a haven for people with a lot of money to transfer their interest into that scheme and therefore not pay tax.
Look, it's like anything, Fran. I suppose there's always people that have more, that get more benefit, I suppose, on that basis. But, let's talk about the people that have less and they get some benefit, because at the moment the tax applies to everyone. So it might be that you're getting more interest, but you're still paying the tax on it. And it's the same, like if somebody has less money on deposit, they're still paying the same rate of dirt tax on their savings. So it doesn't matter. Anything that helps anybody to get some more money on their savings or incentivize them and they don't end up paying tax for it, let's not worry about the bigger ticket holders. And in my experience, and I'm advising a long, long time, and I deal with a lot of people, the majority of people are average and have average savings. We're not looking at there are, of course, people that are extremely wealthy and have a lot of reserves, but they're not the rule, if that makes sense.
Yes. Yeah.
So I think anything that enhances people's experience of investing and where they don't end up paying tax, even if they're only saving €1,000, how bad? Because at the moment everyone does.
Fair comment indeed. Another question for you. We've got a small bit behind on the ESB bill and still paying January's bill, and a couple of other bills, the bins, etc. Never felt as tight for money. Both working. We don't go out. Things are just tight. We have a mortgage, but it's always paid. We have no credit card. Any advice for us going forward? I've spoken to providers. No one is putting us under pressure, but I feel under pressure. What should I do? You know what?
Isn't this so now? This question,
absolutely.
This came in weeks ago after our last session, Fran. Yeah. When I was reading this, I thought, oh my God, I totally, I understand what this person is saying. It's really not a nice feeling to feel you're treading water all of the time. And that's what I get in buckets from this comment from this person, and they must be feeling even more pressure at the moment if that's the case. But again, what I want to say here is awareness. This person is aware that they're under pressure and they're acknowledging it. And I know that sounds maybe ridiculous to some people, but I think that's half the battle. Oh my God, I'm a bit swamped here.
Yeah.
I need help. I need to ask the question, even to us, or I need to ask the question of somebody, what do I do here? So again, to underpin what they've done already, I would say all they can do is speak to their providers, possibly look at different pricing within their various contracts, be they utility bills or whatever it be. But again, just be careful about fixing in at the moment. I'm not a utility bills expert. I'm with you. I have to look at my own bills, but I would say to people, just be careful at the rates they're fixing in at the moment, because there's great temptation to panic and jump into contracts. Just be careful. You need to speak to somebody I suppose within even the utility bill company and ask them about the historic rates. They don't have a crystal ball. It's like us looking at markets. They don't know what's going to happen on utility bills and rates, but, they'll give you an inclination. So again, that's something you could look at. I would also ask, have they received a pay rise recently? Now, any employers are going to be screaming, I am an employer, but any employers are going to be saying, listen, we've enough going on between auto enrollment and now fuel prices and this is going up and that's going up. But to help this person, sometimes they don't get regular pay rises or they haven't received one in a while, and maybe that's a discussion they need to have with an employer, even if they're told no, they've asked. The other matter would be bigger ticket items like their mortgage. Is there any wriggle room there? So again, will the government have to intervene? Yes, possibly. I don't know. Again, you probably know more from that recent interview than I, but I think we're all going to have to watch this space. People are under pressure. But can I just say to this person, it's great that you've set it out. Just keep your chin up. Yeah. You'll get through it.
Do you know something I'm wondering as well? If you get behind on your ESB bill, does that affect your credit rating?
No. I would say no.
Okay.
No. Right. Look, again, it's a strange one. I'm not encouraging people to stop paying their electric or whatever because it haunts them. It's a bill that has to be paid. But no, I have never seen an ESB bill affect a credit rating.
Okay,
in the central credit register, because I suppose again it's not something that you've signed up for credit. Is maybe my interpretation of it, but no, I haven't seen it, Fran. But I'm open to be contradicted.
Another question for you then, Francis. I'm feeling extremely overwhelmed. Somebody else is feeling overwhelmed.
I know, yeah.
This morning.
I'm
43 years old, regretfully did not start a pension. Is it too late? Well, 43 is hardly old.
No, I would say, firstly, please don't let this swamp you.
Yeah.
Just think of pensions as long-term savings, okay? And I would say, look, it's never too late to start a pension. I have people that come into me in their maybe early 60s that have never did pension, and I'm saying, hold on a minute, you can get some tax back, and I'm looking at pensions for them even in their last couple of years before retirement. So no, I hate to tell you, you've years to work yet. I'm saying this to this 43-year-old. So the other question I would say, are you self-employed? Is what I'm thinking here, because I ask that as if you're PAYE and you're earning more than 20k, you've been AE'd or auto-enrolled, or you should be a member of a group pension scheme now based on recent changes. If you are earning less than 20k, then I question if a pension is the right thing for you, as I expect you're not paying very much tax and you might be better off with a long-term savings plan. As we've always said, there has to be an incentive to do pension, and I put that, the word pension underlined, because once you go into pension, there's rules about getting back out. So if you don't have tax incentive, what's the point? Okay? So again, don't panic, please.
All right. Finally, it's a rather complex one, Francis. We have 4 adult children who will eventually be the beneficiaries of our estate when we die. Our solicitor mentioned that we will have to pay a tax bill. I know they're entitled to a certain amount each, tax-free, but can we avoid the tax on the remaining balance? We have worked long and hard and paid a lot of tax over the years, all at high rate. They are working and also paying tax, and it just seems unfair that we pass on, what we pass on will be taxed again.
Yeah, and again, this kind of ties into the first question that we had in a roundabout way, because it's about thresholds. So I said, firstly, again, it's hard to advise when we don't have specifics here, especially when I don't know how old you are, how much income you have or you need, your health, your children's circumstances, how old they are, how responsible or money savvy are they? Are they single? Are they married? Do you have grandchildren? So they're all the things I'd be looking at if I was trying to advise somebody. And by the way, again, tying into politicians. This is currently under review, from what we understand. The Taoiseach has recently said that they're looking at these thresholds, I think, at the moment. So I'd say watch this space for change. Again, I might add, be that to your benefit or detriment. So in general terms, I'm just going to assume here that this is a married couple, your children and your assets are in Ireland, and that your 4 children are single with no children. Threshold at the moment for that child to inherit or be gifted in their lifetime is 400,000, and anything in excess of that will be liable for 33%. Okay, so if the total estate is equal to 4 times so that'd be 1.6 million, then your children should be tax free. Okay, they should inherit your estate tax free. Yeah. Again, depending on the thresholds at the time of your death. If you have funds in excess of the 400,000 per child, and you have grandchildren, you can leave 40,000 per grandchild. Okay, as well as what you leave your children. And if you want to take it a step further, you can also leave money to your children's spouses if they have any. Actually, that should be 20,000, okay? So the above structure may well see your estate distributed with no CAT liability. But if it doesn't, if this person, again, speaking of levels of wealth, I don't know what level of wealth this this individual is talking about. But if it's a thing that this still doesn't deal with their estate, they can look at pre-death gifts by gifting each of their children 3,000 each. So this couple can give 6,000 to each of their children. Okay, under the small gift exemption.
This is per annum, is it, Francis? Yeah.
And they can also gift their grandchildren 6,000, and even their spouse, the spouse of, if that applies, of their child as well. So there's a lot of money could be given out potentially under the small gift exemption. Again, be careful what you're giving away. Sometimes people can be overzealous on the small gift, but because they're worried about fair deal schemes and all of the above. Give away your money when you're kind of finished with it, or when there are ways of dealing with capital acquisitions tax, and that's sometimes people's fear. If we're looking about a more substantial gift pre-death, we could look at using something like a Section 73 savings plan, which I won't bore you with today, but we've spoken about before. And indeed, post-death, if your estate is still going to be so substantial that the beneficiaries will have a substantial inheritance tax, even utilising the thresholds to the max, then there's a thing called a Section 72 life policy, again, that we've mentioned before, where you can take out life cover specifically written as a Section 72 to deal with the capital acquisitions tax that the recipients will face. So sometimes people say to me, yeah, but I have 500,000 life cover. First question I would have is why? Do you have 500,000 life cover? And if you think that that's going to deal with the estate down the line, actually all it does is increase the value of the estate if it's not written specifically as a Section 72 policy. But again, this is a long-winded answer, because this is even further. There's far deeper discussions to get into in a situation like this. But that's just to give a flavour. Again, I would just be mindful that if you don't gift properly, it can technically reduce thresholds of the person that's eventually going to inherit from you as well. So it's just take the time to do it properly and to seek advice is what I would say.
Absolutely. And speaking of advice, if people want to talk to you or your team, Francis?
Yeah, no problem. They can contact us through our website, which is www.foh.ie, or email me foh@foh.ie, or ring the office in Clonmel 052 6129487.
All right, great to talk to you.
Thanks
as usual,
a million,
Francis.
Fran.
Thank you.
Bye.
Good morning to you. That's Francis O'Hanlon there of FOH Finance in Clonmel. We'll take a break. Back with more in just a moment.
Tipp FM's Tipp Today.
With Slattery's Garage, puck on. It's time to change. Test drive the award-winning range of Peugeot hybrids and fully electric vehicles at Slattery's Garage today. See slatterysgarage.ie.